What's going on, YouTube? Time for another recap. Another amazingly clean day here, as we like to do. Let's start off on the X. So one little free call here we posted, and I gave you guys the over-under level of 524.13 on the Freebie Twitter, and this is our algorithm from this morning. And we said long, which is what I do for our chat nowadays. Here we'll draw a red or green progression of what your entry and exit should look like. So you're going to be long biased above 524.13, and obviously vice versa, be short back down. I picked 528 right here, 1618 for the top of the day, 3820 weekly fib, and a couple other algos at the 1618. And before I left my crew, I told them wasn't going to go much higher than that. And after 10:30:11, go ahead and short the market and watch for that, and it'll be good. So let's get into the recap and how we predicted exactly what the market did. So algo, two different ones we're going to watch here. We're going to try to go a little slower here because TOS is just a lag monster here on the poor MacBook Pro right now. No understanding why. It just does whatever it wants, whenever it wants. So this algo, January 2nd, okay? We were talking about this one all last week, and it provided our short play, right? So in our last recap, you can check out our last videos showing you how to play this, but we had no price action to the upside. So this fib box, we pointed to the upside coming into today. And we utilized another algo mixed with that, okay? So the algo from January 2nd and this morning's pre-market at 7:05, we created another algo here on QQQ. The gold levels you're going to see on the right side of the screen are January 2nd's Fibonacci. Now that is 1618 and 2618 from January 2nd way back there. This one is our regular standard colors. We got a couple boxes on the screen on what we called for the top of the market. So let's put this into perspective. Now, we came into the market assuming that we were going to have a very long bias, right? Sorry, 2S is going to be just a mess today. I think it's just TOS. MacBook didn't struggle this morning. Nothing has obviously changed, just kind of lags whenever it wants. All right, so this one was created here this morning, and this is the one that we overlapped with multiples. So I put a blue box down here, and this blue box is where the golden pocket is. This is where our short is for the day. This is for our long is for the day. If you fib out the high-low of our new algorithm here this morning, it gives us this golden pocket, which during live trading hours, this is pre, obviously this is live. Golden pocket does not have a tag during live price action. So the likelihood of a breakout to the 1618 and a back test of that golden pocket is very likely. This is a cycle that the algorithms like to run, and Fibonacci can help us out with that. Now, I drew these pretty green structures here for our longs for our crew. So I told everybody today, 523.13, anything above the top of this algorithm candle, we should move to the 1618. Well, lo and behold, we got the 1618. That paired up nicely. So pairs, I like to overlap Fibonacci's. I like to see how many points of interest we can get from a long-standing time frame like the weekly, daily, and then we measure it up with the intraday time frames as well. So if the intraday timeframes line up with the daily and weekly, we obviously have a very strong level because we're stacking catalyst, right? We're utilizing a weekly, a daily, and a 5-minute. And if those Fibonacci points come into multi-crossovers, that's one right here. This is the 1618 from January 2nd's algo. That looks like this in pre-market. This is the 1618. This is still not tagged. There's no live tag. So price action coming all the way down to here is highly likely. We talked about that this morning. And look at the overlap. Here's the golden pocket of today's pre-market algo, high-low Fibonacci. That gives us the lower golden pocket right here. And notice the 1618 is directly in line with 3820. So we know 520 and about a half here is a very big level. And then we knew 1618 from this morning's algorithm, right? Anything over under 524 was our call. We suggested much higher long, and it pushed right to the 1618. And we put this purple box on, even on X and the tours, but as high as we wanted to go for our over under. And I called two longs, one right to the 2618. This is again from January 2nd. Now notice we could have used that box range as well. And what I mean by that is two different Fibonacci points are structured and pairing in the same zone. So between 526.29 and 528.80. So again, we have our third overlap of Fibonacci's, right? Weekly 50 with the 2618. We have one down here, 1618 with the golden pocket of pre, and we have the 1618 for today, pre-market, with a weekly 528. So what I do is I take channels in between those, and I post them on little boxes, and we understand that there's high over-under probability. There's very high support resistance. A lot of algos are looking at the same spot. So we called long here, so we drew this green box and saying long here, target here. And then if we consolidate here, and I'll show you why we consolidated here for the next long, we drew another long saying, okay, once this long is done, you wait for the consolidation period to slowly get back in, and you go long above 525.80, which was the call, and then we were going to go to the 1618. So we also called this one up to the 1618, peak the market, right? Let's look at a couple different instances for the oscillation indicators that are going to give us that feel as well. So as we get, there we go. As we take a peek here at pre-market, the RSI and the MACD were both giving us very, very heavy hot signals, right? You can see that. So we were going sentiment-wise, it looked like the market always had room up, 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 and we didn't spend much time on the bottom side of the relative strength index, and obviously no time at all on the bottom of the MACD, which suggested the early part of the morning had strength to it as long as it held and maintained momentum. Trend is friend, right? Higher lows and higher highs. The momentum of the price action is what helped out a ton to get these perfect price targets, okay? Now for the hot right here, and before I dropped off my live stream for everybody, I told them 10:30 a.m. To 11:30, I said, watch for the short. You're gonna get the ending green move here, and then you're gonna get a short all the way back down. And we picked a couple different places there for that. So if you look down here, you got 10:30 a.m. to 11. So even if you could box that out, make it easier to see, 10:30 a.m. to 11. I put out this box right here for my crew before I left, and I said, watch for the short here. So luckily, the high was right there at 10:30. We got under that 10 SMA, started riding back to the downside, and had a perfect short. And we're going to end up down here into the golden pocket for that short. Most likely by the end of the day, 520.54 is a great potential. Now let's talk about why we said that. Well, because the algorithm here in pre-market from January 2nd has a no tag 1618. And I'm really big, and so are the algos, on when something tags the first time. So January 3rd, let's look at Friday. Notice the price action went up outside that algo here, but notice this gold level. This gold level is the 1618 discussed from January 2nd's pre-market. Notice there's no tag right here on Friday. There's no tag. So price action will come back down to that Fibonacci point after completing a cycle, probably to the 2618, right? So here's your 2618 and 50, 1618 from this morning. So we watched the perfect double algo overlay all the way back down. And again, we mentioned that the 1618 gold is paired up with the pre-market algo that we have today. So this golden pocket right here needs a tag, and as long as we are underneath 524.13, that's where that picture came from, we will get a short opportunity that's going to look like this. So anything under 524.13 is a continuation weakness, and usually I'll draw a box for the crew here and our premium Discord and right to the downside. So most likely we're going to come down, hit that 200 SMA, chop fest a little bit, confirmation of weakness, and drain out to here. Now we have a couple different magnets besides the Fibonacci that is working for us. The 200 SMA is just in the peach dash line right here. That's the 5-minute. If you notice again on Friday here, we got very close to that, but we did not tag it. We got picked up ahead of time when we were calling those longs, which means the market can use that as an anchor, right, like a magnet, and come back to the 200 SMA 5-minute later on, right? So we shied it obviously this morning. We never went to the 100 EMA, and that's why when I left my premium Discord this morning, I told everybody to pick the top of the market here, short after 10:30.11, and look at your targets as you walk down. First target's going to be 5-minute 100 EMA, because we did not see that 5-minute 100 EMA early on. We broke through that 100 EMA, and now we are to the 200 SMA, which we will tag today. It'll pop back up here a little bit, just do its little static trend, and down to the 2, because this 200 SMA 5-minute was not tagged on Friday. Now that brings us to our last no tag, which if you created this Fibonacci here on the algo and pre, we have, again, like we said, a golden pocket of no tag. And we have a high probability on a normal trading day without crazy news to come back down and take that every time. Okay, so that is about all we said for today on Qs. We'll go over two other little things here. We'll go on the SPY. And we talked about the SPY today and the target long out of the gate. And if you watched our last YouTube videos, I said we're going to go long to 598 as long as what? We were above the daily moving averages. So if you watched my last video on Friday, we predicted we were going to get along all the way up to the daily moving averages. Here's the 10 SMA in the blue daily, and the red dash line is the 50 SMA daily. They're just coded into our intraday chart so you can see them. Now, we have a opportunity for the gap, because this is a daily gap left by SPY 598, right? and this was our magnet target. So even in pre-market, I said it's all non-biased overnight. We're going to get drug up. You can see how strong that RSI was sticking to the top channel of the RSI. Anything over 50, that's the top channel, that RSI. A little bit of Fed speak dip there at the morning, but regardless, we were straight up and targeted 598. And this is where the consolidation play was now in SPY. And I said, everybody, you know, just take it easy right here because we'll probably run into the gap and most likely trap a bunch of shorts and then go for the next leg up because we still need the 59935 tag. Now, where's that Fibonacci? Same place as QQQ. January 2nd, high-low pre-market algo. When QQQ and SPY, both tickers, had the same algo and the same pre-market, they both actually went down to the lows of the same place. It was yesterday's close. So the bottom of this algo paired up with QQQ, right? And they both had the exact same bottom. So that's a very strong algo here. Now, and what I mean by that is magnets, which means the fibs on that algorithm high-low are going to work very well. Here's the 2618 of the January 2nd, okay? So I put an orange box here, and I said, all right, guys, the next long saying is on QQQ. Anything above VWAP is what I called, which is in the purple right here. Just hold your VWAP, go up to the 598. Okay, no big deal. We had that big dip. We bought the dip. We ran it up, did about $1,400 today green. We made 18 points right here. And then I told everybody, as long as it's above the 10 SMA, we're going to grind the 10 SMA because we're in a controlled algo buy. We're going to come to the orange box, which is the 2618. And again, after 10:30, 11 a.m., you will be able to short this, and boom, boom. So 10:30, 11 walked on, back to VWAP, 100 EMA, as again, you notice at the open, 100 EMA was nowhere to be found, 200 SMA, perfect. And this was the short play. And again, the 1618 has not been tagged from January 2nd's pre the day before, okay? Here's Friday. Again, we had that awkward little chop to push. We made it up to the daily moving averages. Here's the 100 fib. We never made it to the 1618, okay? So again, big gap there between price action and Fibonacci level of the 1618. So when we came into today and assumed to squeeze back up, we did not hit the 100 EMA. We did not hit the 200. We were nowhere near the dailies. We knew that we were going to have a great magnet to the daily gap of 598, which we did call, okay, on our last YouTube video. If we are above the 10 and the 50 on SPY, go long to 598. It's exactly what we said. Check the video. So as the 2618 comes into resistance, we called it to the downside. And now we have a beautiful target of the 1618 and back test the moving averages. Okay, perfect. Last but not least, we got the volatility index. Now the volatility index here on VIX, again, two different reasons I called this in the last trade day on Friday. We have gaps at $16.15 and $15.88. These two gaps led me to believe that the deviation oversold would not be a huge event, which means the standard deviation this morning was at -1. This yellow line, here's the center of the deviation, here's -1 standard deviation. When that came in here and it popped a little bit off that news fed, I figured it would come down, loop 1588, and everybody would go short. So again, I called this for my chat and I said, once 1588 is filled, start looking to the downside of the market, upside of the VIX. And luckily, that's what happened. And I said, wait for the MACD cross. 10:30 a.m. Central, all the way to 11. You notice the MACD cross, notice the convergence here in the RSI, and notice, as we said, 1588 will become support, and the market will fall exactly at 10:30, 11 for both. Great. So that trade worked out. Now moving down to our last target of the day for short, 598.29. That's going to be a magnet because of the first tag potential of 1618. And that is it. So likely moving into the next days, we hit our long target. Now if we get a consolidation day, our little slowdown, perfectly fine. Doesn't matter to us, right? We're at a temporary bounce. Two things will happen here. Remember the 3-down rule. We have an all-time high. Push down for the big old Powell candle. Snaps back up. Lower low. Now lower high, right? So that's the issue. 1 down, 2 down, and then if this continues to be a lower high, we'll finally come back down for that 100 EMA. And so on and so forth. Now, if stocks take a break early January, January is going to tell us a lot. So if you tuned into our live stream, we talked a little bit about January. We're going to talk a little bit more this coming up Saturday at noon Central. I put on a free live stream. We're going to talk about part 2 of market sentiment. We're going to give you guys some intel on how this 3 down is going to be affected by that sentiment. Now, for regular technical analysis, we do have the 1, 2, and then lower high potentials. Doesn't have to play out, obviously. We have some big levels to worry about now since we are now in a gap up over the moving averages, right? So this is what we warned in that last video where If we would reject from the moving averages, we'll just make a small lower high. We'll head back down to the 100. If we forever gapped over, or for whatever reason gapped over, and we were talking about that back here on Thursday, moved over and squeezed for Friday, that would be the play. It just happened to go Friday to Monday instead of Thursday to Friday, because this is the play we said to watch for. Excuse me. The sickness taking my voice. So with the daily gap now being filled and us creating another daily gap, we're obviously going to use the gap up candles Fibonacci tomorrow. So wherever the candle closes, even if it does some crazy wipeout and fills the gap, then we'll readjust for the pre-market morning for my Discord group. But right now for the high-low, we have the Fibonacci gap up we're going to use, which means the high and the low will be used tomorrow. We're going to draw this out like so. We're going to see where those levels start to hit pre-market. We're going to utilize this gap up candles Fibonacci high-low tomorrow for the daily and pick direction. And my assumption is two things will happen. We're either going to close up here on a nice little low body doji like so, or maybe a fat body. Tomorrow we have a chance to kind of be in the gap range again, so we could actually push down into that, hit supports, and then rally up again. That would be the use case for shrugging off the 3 down, right? The big one we were just talking about. It'll shrug off that 2 move and then just go flying back up, which we've seen it do multiple times, especially in bull runs where the market's just not ready. And again, we're pretty bullish here all the way into 25. We're just waiting for a 12 to 18% correction. I'm an 8 to 12 usually, 12 to 18 for a big correction, but 8 to 12, we'll see. I want 12 to 18, 8 to 12. We'll play by ear when we see it, but that correction, 8 to 12, to purchase for 2025's longs, okay? So for tomorrow, we'll see what we get with the gap. We're either going to press into that gap a little bit, hold the gap up, range out to all-time highs, or we'll fill that tomorrow, and then we'll start lower highing, and then maybe we start finally coming back down to chase that 100 EMA. We'll see. Volatility index will be very important as we lead up to that. Last but not least, I will give you a few little pieces here. We have a couple 1-minute gaps here down to 6,000. So ES will come back down to 6,000 here, and it will fill 6,000 to 6,004. We made those very early, about 2:30 a.m. Central, and they are still left open. So again, I knew that this temporary top was going to roll over. All I had to do was use Fibonacci to find that percentile top. It's just a percentage. It's just it may not. It just has a higher probability to do it at this 1618. So that's why we use what we used today. And we call this high as today, as we have other algos up here, 60, 71, 60, 73. We got super close to that. And we do have some up here in the 60, 80s too. So even if this does, like we said, pull back early coming into tomorrow, maybe a couple consolidation days, and then range up higher, we still got more to go, man. Still got long side. I posted on X as well for NQ, and I said in the next coming weeks, maybe even after January, I will see you guys at 22,000 at NQ, way up here, 22,080 on NQ. We have a couple different supports to knock out and a couple different confirmation supports to be had before that happens, but we have a good chance to be there. If any of this sounds good, you want to see me do this stuff live and talk about it live, links in the description to hang out with us in our Discord and our live stream Monday through Friday. If not, that's great. We'll see you on the next YouTube. You guys take care.